Iran is reportedly launching a new digital insurance platform for cargo ships. The companies pay the insurance companies in Bitcoin, and they get through the Strait safe. Congressman Nick Begich and officially establish a strategic Bitcoin reserve. Begich tells Fox Business that this is basically the new Fort Knox.
And this might get some people upset. I think Bitcoin has lost the plot. The fan with the Iran war, and Bitcoin was always the best alternative to fiat currency losing its value. And I always thought it was a better version of gold than gold. Well, gold just blew up and went, to $5,000. Bitcoin dropped.
This video actually made me stop and think, because I think people are looking at Bitcoin way too simply right now. Everybody keeps debating, is Bitcoin digital gold? Is Bitcoin a hedge? Is Bitcoin risk on or risk off? But I think the bigger story is that Bitcoin is slowly getting pulled into geopolitical governmental reserve.
Iran is reportedly launching a new digital insurance platform for cargo ships. This is in the Strait of Hormuz, and here's the kicker. They're settling payments entirely in Bitcoin. This is how it works. The companies pay the insurance companies in Bitcoin, and they get through the Strait safely. That's the trade-off. It's a direct move to dodge our banks and scoop up a fresh source of cash. And this covers a much larger shadow economy. New estimates from a threat detection data firm show Tehran is sitting on a crypto pile worth a staggering $7.7 billion. That war chest has been expanding ever since heavy sanctions cracked down. This was during the first Trump administration, by the way.
This part really caught my attention because people hear this and immediately think, oh, wow, Iran is using Bitcoin. But I think the deeper story is much bigger than that. What happens when sanctioned countries start using Bitcoin because they need a neutral settlement asset? Because the Bitcoin stops being just an investment and starts becoming global political infrastructure. And this is where the incentive structure gets really weird, because if countries under sanctions begin accumulating large amounts of Bitcoin, and the United States keeps confiscating Bitcoin tied to sanctions, sanction evasion, or illegal financial activity, then over time the US government could end up accumulating enormous amounts of Bitcoin. And the crazy part is the US already holds a massive amount of confiscated Bitcoin. And lately there's been more discussion about not selling it. That's the interesting shift, because people still think governments are anti-Bitcoin, but their actions are starting to look very different from their public messaging.
Fox Business exclusive Congressman Nick Begich is introducing a bill, he says, to lock in Trump's plan and officially establish a strategic Bitcoin reserve. Begich tells Fox Business that this is basically the new Fort Knox.
In order to maintain the sovereignty of the U.S. dollar and the strength of the U.S. dollar, you've got to have a strong reserve policy. That's why central banks around the world for so many years, thousands of years, in fact, have held reserves on their balance sheet. We need to recognize that digital assets are the 21st century equivalent of those historical gold reserves.
So Begich wants the government to stockpile 5% of all Bitcoin, which is equivalent to how much of the world's gold the U.S. stores and reserves. And he already found a way to fund it without taxpayers. The Treasury is currently sucking up crypto assets tied to Iran through Operation Economic Fury. Begich's plan, seize the Ayatollah's crypto and drop it straight into the U.S. balance sheet.
This is where Bitcoin enters an entirely different phase, because now we're not talking about retail traders, hype cycles, influencers. Now we are talking about strategic reserves. Governments do not think of memes. Governments think in leverage, power, reserve, control, geopolitical advantage. And historically, reserve assets merge because countries need them, not because everyone agrees ideologically. And this, honestly, I think there's a possibility that over the long term, the United States could end up acquiring more Bitcoin through confiscation and enforcement than some corporations. That sounds crazy right now, but think about it. If Bitcoin becomes integrated into sanction evasion, offshore settlement, black markets, geopolitical trade routes, the amount of Bitcoin seized over decades could become massive.
And this might get some people upset. I think Bitcoin has lost the plot. And when I started buying Bitcoin, and I've sold all of it, except not all of it, most of it, it was because when all the shit hit the fan with the Iran war, and Bitcoin was always the best alternative to fiat currency losing its value. And I always thought it was a better version of gold than gold. Well, gold just blew up and went, to $5,000. Bitcoin dropped. And every time the dollar dropped, Bitcoin should have gone up, because if it's priced in dollars, it was cheaper. So anybody from around the world could go pay in dollars, and it just didn't do that.
Not such a hedge.
No, it's not the hedge that I expected it to be. And that was really disappointing. And so I'd say I'm more disappointed in Bitcoin, not as disappointed in Ethereum.
Because the dollar is going to collapse. People aren't going to want to deal in dollars. They're going to want to deal in alternative. And the best money is gold. And what makes gold even better is the internet. Tokenization is the ability to transact in gold without actually having to physically carry it around. That way you can transact in very small increments.
Okay, this is actually a really important point because I think a lot of people expected Bitcoin to instantly replace gold during geopolitical uncertainty, but markets are more complicated than that. Bitcoin still trades like a risk asset. I think there's another angle here people are missing. One reason gold may have performed so well recently is because gold itself is becoming easier to access digitally. And I think tokenization is a huge part of that because one of Bitcoin's biggest advantages over gold used to be 24/7 access, digital ownership, global liquidity, easier purchasing, but now you can buy tokenized gold through crypto infrastructure like Coinbase. That changes the game. And honestly, I think Ethereum and a lot of these layer one ecosystems deserve more credit for this because traditional assets are starting to inherit the advantages crypto had. And I've noticed this pattern before. Whenever an asset becomes easier to buy, more liquidity, more access, it usually attracts more capital. We've seen this happen in crypto when coins get listed on major exchanges. Accessibility itself creates demand, and I think tokenized gold may be experiencing the same effect. Because now crypto investors who would never go open a traditional gold account can suddenly buy exposure through platforms they already use, like Coinbase. And this, honestly, I think this explains way beyond gold, or expands way beyond gold. Eventually, stocks, gold, commodities, real estate, currencies all become digitally tradable 24/7, and that's where blockchain infrastructure becomes important, not just for speculation, but because it changes how capital flows globally. So I actually understand Mark Cuban's point, but ironically, gold doing better may actually prove crypto infrastructure is working.
Will not allow for a direct revaluation of the yuan against the dollar. That is their hard line. Here's what China's going to do instead. They can allow for another asset to reprice. They can use that asset as an escape valve for this repricing. That asset is most likely gold. Here's why. The United States government holds over 8,000 tons of gold. But here's the thing. On the U.S. government's books, the gold is valued at only $42 an ounce. That is still the price today, which was set way back in 1973. The actual market price of gold right now is somewhere over $4,500 per ounce, which means the U.S. is sitting on a balance sheet that is dramatically understated. Right? Now, China also holds insane amount of gold reserves. We don't really know how much gold they have, but they have a lot. And unlike the U.S., China has been aggressively accumulating more gold for years. And according to research from Luke Roman at FFTT, for 5 of the last 6 months, the single biggest export out of the United States, bigger than oil, bigger than pharmaceuticals, bigger than aircraft engines, has been gold, something called non-monetary gold. Physical gold is leaving America. Where is it going? It's going to China.
There's not much Bitcoin left because at this point, all of the organic supply of Bitcoin being produced by the miners is being taken up by the Bitcoin.
And you bought more than was mined this year for strategy.
Yeah, we have. Yeah, the formation of digital credit means that the credit market itself is absorbing all of the organic supply of Bitcoin from now to forever. Our company will probably buy all of the Bitcoin gets produced by the miners between here and the year 2140. Then there's no more Bitcoin.
This is where the supply side becomes really fascinating because now you have corporations accumulating, ETFs accumulating, governments potentially accumulating, strategic reserve accumulated, and then confiscation, Bitcoin accumulation. Long-term holders refusing to sell. In the meantime, there's a fixed supply. So eventually, the question may stop being, will Bitcoin survive, and become, who ends up controlling the supply? And honestly, I don't think most people understand how much psychology, once governments stop viewing Bitcoin as something to ban and start viewing it as something they may need to accumulate before rival countries do. That's a completely different game. I think the biggest mistake people make with Bitcoin is thinking this is only about price. I don't think this is just about price anymore. I think this is about incentives. And history shows systems change when incentives force them to change. Now, when everybody agrees, so whether you love Bitcoin or hate it, I think we're entering a phase where governments, sanctions, corporations, reserves, tokenized assets, global capital flows are all starting to collide together. And honestly, that's way bigger than just another crypto cycle. Let me know what you think in the comments. Do governments eventually become the biggest Bitcoin holder, or was Bitcoin designed to prevent that from happening?